48% returns. I'm looking at what you invest in. So it's equities, credit, volatility strategies. But for equities, you're looking at quasi-arbitrage. What does that mean?
Well, what it means is that we don't only invest in directional equities, but we try to benefit from certain inefficiencies in the market. Sometimes in merger situation, sometimes in capital structure, and so on. Mm-hmm. So, we call them quasi-arbitrage because we don't believe in truly riskless trades. There's no such thing. So,
there is no such thing.
Right. So there's always some risk involved. So
Eddie, but I mean, are these sort of like wrongly priced equities in your view? I mean, you take a stock and you look at the fundamentals and say, hey, this is looking undervalued to me.
Yes, I think that is starting to happen. I mean, as Susan is mentioning, Chinese stocks are down to 9 months lows. So, obviously over the last couple of months, especially, there's been a lot of stories about frauds and scams among Chinese stocks. And I think people are starting to be panicking and to be throwing the baby out with the water. So, inevitably, in such a situation, some value will emerge. We're starting to see stocks which are trading at below 10 times PE with dividend as high as like 10%. So I think that's becoming quite interesting.
There's no such thing as a free lunch, is there? I mean, after that Sino Forest incident that we had as well, and that's look at a lot of people, running for cover, haven't they?
Yeah, although even with respect to Sino Forest, first of all, we're not involved, so I don't have particular insight into the incident. It's just an alleged incident. I think people are jumping to conclusion. And I've seen people, on TV at your station at night saying that, avoid all Chinese stocks at this moment. I think technically maybe that's the right thing to do, but fundamentally, I don't think all Chinese companies are fraudulent.
Well, how do you judge the Chinese companies you invest in? How do you gauge what's on their books is actually what's actually true, what they hold?
Well, to be honest, I think a lot of it comes from experience, from understanding the industry, the companies, and management, most importantly. So I think for the companies that we invest in, we always perform as much due diligence as possible. We do site visits, and we check around about the reputation of the management, and we do it very carefully. I mean, but sometimes even we make mistakes, but I think there are certain telltale signs. Like for instance, company may claim to be making a lot of money, but they pay no dividends. The cash flow is still probably negative. That is actually quite common in certain sectors, such as agriculture. Which
yes, of course, is it?
Right.
Right. Okay. So you're saying you're looking for value right now, undervalued shares. Are you seeing that right now in this market? But what sort of sectors?
I think they're starting to emerge, but I think one can be quite patient because of all the macro headwinds that we were talking about in Europe. We haven't even touched upon U.S. or indeed even within the region. Chinese inflation problems. So I think they're starting to be some deep value propositions, but you can be patient. I think areas that we're looking for are still, I think, domestic consumption in China, and also. I think this is a bit controversial, but we think there's starting to be value in the property sector as well.